Liberal government in their fall economic statement last Tuesday unveiled an initiative that calls Canadian Mortgage Charter. According to their statement, the charter builds on existing guidance and expectations how the bank's supposed to treat borrowers. Deputy Prime Minister and Finance Minister Chrystia Freeland said this is the most important part of this charter in fall economic statement. It also promises of a new funding to help build affordable homes, to support renters, and put a clamp on Airbnb. This includes an additional $1 billion for building and affordable homes and also an additional $15 billion for the construction of rental apartment buildings. Canadian Mortgage Charter also lays out and enforces consumer rights when renegotiating their mortgages. And I think we all waited for that to make sure we can renegotiate our mortgages even if our situation a little bit changed. With borrowing costs near multi-decade highs, most lenders require borrowers to prove they can afford payments at rates of 8% high. That makes it too hard for some people to even get final approval for the regular financing from the regular bank. Even if before they got pre-approved, at this point, with the rate of 8%, they cannot be finally approved to take their mortgage when they need to close their house. So let's look at the charter. What does this charter really say? This charter contains of 6 guidelines regarding how banks are expected to treat vulnerable borrowers under financial strain. Under the charter, banks are expected to, first, allow temporary extensions on the amortization period for mortgage holders, waive fees and costs that would have otherwise been charged for mortgage relief measures, exempt insured mortgage holders from requalifying under the stress test when switching lenders at the time of a mortgage renewal, which is absolutely fantastic. Requires banks to reach out to the homeowners 4 to 6 months prior to the renewal of the mortgage to inform them about affordability options. And this is something new that they put in this charter. Allow borrowers to make a lump sum payment to avoid negative amortization or sell their principal residence without incurring prepayment costs. Waive interest on interest when mortgage relief measures result in mortgage payments that fail to cover the interest payments. The question is, are any of these rules are new? The official from Ministry of Finances said that all of these rules exist before, but they were hidden. They were very hard to find and they were not clear. Now, putting them in one place makes it very clear about consumer rights. So let's see what really they did. If everything was already existing, what they really did to relieve this big interest hike. So the banks have to reach to the people 4 to 6 months prior to the renewal of the mortgage. And if people have to renew their mortgages, banks are supposed to give them an affordable option. The other new addition in the requirement that they give insured borrowers a pass on the stress test. When you're changing the lenders, you do not have to do the stress test anymore. And this is very important. So I hope it's going to help a lot of people in the next 2 years to take their mortgages and renew their mortgages. And it took a little bit of a stress from a lot of people who were worried how they're going to pass the stress test of 8% if they want to borrow money from a different lender. Or I know a lot of people who were not very happy when banks literally 4 weeks prior or 3 weeks prior to their mortgage renewal would send them the paper. Now they have to send it 4 to 6 months prior and give an opportunity to people to choose an affordable option. I hope it's going to help. We'll continue to have a great market. Alvina Usher, your Ottawa real estate expert.